at Nestle. Now let's go across to Sanjay Sethi, MD and CEO at Chalet Hotel. So how has the demand been this festive season? What are the booking like, especially when you talk about festive season where people are coming out and really spending and trying to, say that, Diwali is back?
Good morning, Pankaj. Good morning, Nayanthara. It's a pleasure and happy Diwali to all of you. Pleasure to be at now. The F&B is doing extremely well in the festive season. As you know, in cities, the hotel occupancies do drop during the Dussehra and Diwali. That's happened, but the Q2 was again a very gratifying quarter for us. In fact, in Q2, the hospitality division ended up with revenues 9% higher than Q2 of FY20, and the EBITDA 8% higher than Q2 of FY20. Overall, our EBITDA for H1 is 14% higher. So clearly we are happy about the performance. And this is in spite of 120 rooms being out of action at our Westin in Powai. The banquet hall was also out of action for 39 days for renovation. Overall, your question regarding Diwali, we don't have any leisure assets in the portfolio, so we don't get any material impact, beneficial impact on the occupancies. In fact, the reverse, our occupancies do drop in Diwali and holidays, but F&B tends to pick up very sharply.
Right. So as you said, F&B tends to pick up. What has been the performance on the F&B side of, the demand? Is it being much higher than the pre-COVID levels?
Yes, so I can't share current numbers, but Pankaj, in Q2, our F&B revenue was actually 18% higher than Q2 of FY20. Now, that's a significant number. And if you were to look at the trending numbers, September actually reported 32% higher F&B revenues than than September of FY20. September as a month was brilliant. I mean, our average room rates hit 9,070, which is roughly around 10% higher than FY20 average room rates.
Good morning, Mrs. Sethi. This is Nayanthara. Happy Diwali to you and your entire team. I was going through your numbers. EBITDA is up 99% year on year to come in at a little over 80 crore rupees. So taking off from what you were saying, this must imply what? That your average revenue per room, RevPAR as it's popularly called, is much higher. Occupancy must be almost at 100%. Room rates must be higher too, obviously. But the question is all of that going to be sustainable?
So, Nayanthara, you must remember that Q2 was actually a challenge quarter, which typically is a challenge quarter every year. This time a little bit more because August had 4 midweek holidays spread across 3 weeks. Now, what that means is that for business travelers, literally 3 weeks were wiped out within the August month. In spite of that, we've managed to sort of record very, very good revenue and EBITDA numbers. So we are encouraged that in general, it's business back to normal. In fact, I used the term a little earlier that this just accentuates back to normal sentiment for the hospitality industry. And the brilliant rebound that we had in September on occupancies and rates is extremely encouraging for the trend going forward. You've got to ignore 1 or 2 months, which is typical of hospitality industry during the holiday seasons.
You already made it pretty clear that you don't have leisure assets. Those are not the kind of hotels that you do have. Having said that, when you talk about hospitality normalizing, can you give us a sense of whether the foreign tourists are back? Domestic travel has, of course, really picked up. Indians are discovering India like never before. On the other end, corporates have discovered once again the benefits of maybe less travel, and we're still waiting for the foreign tourist numbers to return to where they were pre-COVID.
So I think this is a fallacy that corporates are not traveling. Domestic corporates are traveling and traveling like how. Just to give you some numbers to back that up, in Q2, our Indian recovery to pre-pandemic numbers was 156% for domestic travelers Now that's a 56% growth in domestic travel compared to pre-COVID numbers. And these are all business travelers. So I don't think the challenge is on the business travel side. In fact, I believe business travel is much healthier than it was before the pandemic hit. On the foreign travel side, there are challenges. The recovery is only 64%, which means we are 36% shy of pre-pandemic numbers, but that's just for a specific reason. We've had huge amount of visa challenges for UK and other European country travelers into India, same with US to some extent. We also have a lot of challenge on the flight seat capacities coming in from US. Mumbai still doesn't have a direct flight from US, anywhere in US. And that's now been announced. Air India has announced they're opening their flights to US. Bangalore's been announced, direct flights to US. Hyderabad, they've announced direct flights to US. So I think that will pick up very quickly. And typically they are back in November, right up to March. And I see that part of the period being very strong with the flight seats back to normal.
Right. So I just wanted to understand a couple of things. You know, price hikes have been particularly sharp, not only in your industry, even in the lower down industry, it's been quite sharp. How are people adjusting to that, the new changes? Now it's been a while that their prices have been changed. Do you think that's become the new normal?
I think it has, but Pankaj, you look at it slightly differently. The prices we were holding till last year were the same prices that were prevalent in 1920. So the sharp rise is for a period of 3 years to cover 3 years of inflation. And therefore it looks sharp today, but if you were to sort of do a CAGR on that, it's not that sharp. It's about a 9-10% growth year on year, which is pretty much the norm. So whilst we're expecting a sharp rise this year and in the next year, if you really average it out over the last 4 or 5 years, it's a reasonable rise. We've also had to absorb inflationary costs well. We're very proud that we were able to keep our costs under control. Our teams have worked very hard on that. And our vendors have backed us up. So with that as a background, I think price hike is imminent. Most people will accept it because they've been they've been using the 2019 rates till now, till recently, a few months back.
All right, so got the point. Thank you so much for taking out time for us. Season's greeting from to you, your family, and the entire team at Chalet Hotel.